February 2025.
Sounds good.
We've got this financial newsletter from ICAN Financial, PVT Ltd. They've got investment insights, market trends, the whole shebang.
Okay, yeah.
But get this, they're talking about Donald Trump being back in the White House.
Wow, back in the White House.
And it's already causing waves globally. But here's the interesting part. Amidst all this, India's economy is predicted to do amazingly well, like outperform everyone else.
Really?
So let's break down what this means, for you and me.
Yeah, absolutely.
So Trump being the 47th president, that's a pretty big deal.
It's definitely a big shift, especially considering how different the world looks now compared to his first term.
Right.
It seems like his focus is on tariffs, rolling back those climate change initiatives, and then there's those federal appointments he's making. It's interesting, to say the least.
Interesting is a good word for it. So what about the Federal Reserve? What are they doing with all this going on?
Well, Jerome Powell, the Fed chair, he seems to be taking a cautious approach.
Okay.
Keeping things steady for now. Monetary policy's staying put, and they're sticking with that 2% inflation target.
For now.
Yeah, for now. Who knows how long that will last, especially with Trump shaking things up.
Yeah, it's a wild ride.
Yeah.
But the U.S. economy, it looks pretty good on the surface, at least.
Yeah.
Unemployment's down, consumer spending's up.
Right.
But then you've got Trump's policies, and those could throw a wrench in the whole thing.
It's a complex situation, that's for sure. And all of this, it has a ripple effect on India,
Right.
A strong U.S. economy could actually be a good thing for India. More trade, more investments flowing in.
Makes sense.
But then again, Trump's policies, especially those tariffs, could cause some friction.
Yeah, it's a delicate dance.
It is.
So while the U.S. is figuring things out, what's happening in India itself?
Well, the Reserve Bank of India, the RBI, they're taking action to address this liquidity deficit in the banking system.
Liquidity deficit. What exactly does that mean?
It basically means there's not enough readily available cash flowing through the system.
Okay.
And the RBI, they're trying to fix that.
So it's like making sure there's enough money moving around so the economy runs smoothly.
Exactly.
And how are they doing that?
They're using a couple of tools. Bond purchases, where they buy government bonds from banks, putting more cash in their hands, and currency swaps. They exchange rupees for dollars with banks, also boosting their liquidity.
So how does this affect, say, the average person's finances?
Well, these moves can have a big impact on interest rates.
Really?
Yeah. If the RBI is injecting liquidity, it could mean lower interest rates on loans. Good news for borrowers, right?
That is good news. So the RBI is trying to keep things stable amidst all the global uncertainty.
Exactly.
But what about specific sectors? How are they doing?
It's a mixed bag, really. Manufacturing, for example, it's slowed down a bit recently.
Oh.
Yeah, the HSBC India Manufacturing Purchasing Managers Index, or PMI, it's at a 12-month low.
Is that a bad sign? What's causing that?
It's something to keep an eye on. The PMI suggests new orders and production are growing, but at a slower pace.
I see.
There could be a bunch of reasons, both global and domestic. Globally, all the uncertainty around Trump's policies might be making businesses hesitant to invest.
Makes sense.
Domestically, there might be some sector-specific issues going on. It's hard to say for sure without more data.
So not all sunshine and rainbows then. But what about the service sector? I hear that was doing quite well.
You heard right. The service sector is actually booming right now.
Really?
Yeah. The S&P Global Survey, they also use PMI data, and their numbers show strong growth, much faster than manufacturing.
Wow, that's a big difference. Why is the service sector doing so much better?
There are a few key factors. India has a young, skilled workforce, perfect for the service sector.
Right.
Plus, more and more things are going digital, and there's a rising demand for services within India. It's a good time to be in services.
So it's like a seesaw, manufacturing down, services up. But what about the overall economic activity?
Well, one indicator we can look at is goods and services tax, GST collections.
Okay.
It's a consumption tax, so it gives us a sense of how much people are spending.
Yeah.
And they've dipped recently.
Uh-oh. What does that mean?
Could be a few things. Maybe people are spending less, so there's less tax revenue. Or maybe there are problems with businesses following GST regulations. More analysis is needed to see if it's a temporary blip or a sign of something more serious.
So, mixed signals from the Indian economy.
It seems that way.
Strong service sector, struggling manufacturing, and those dipping GST collections. What are the experts saying about India's prospects overall?
Well, Moody's, they're a global credit rating agency, and they've got some interesting thoughts. They acknowledge that India's got some fiscal challenges, but they also see potential for the country to benefit from global shifts, especially with trade and investments maybe moving away from China.
So they're cautiously optimistic.
You could say that. They see both risks and opportunities, which makes sense. It's a complex situation and it could go in a lot of different directions. But it definitely highlights how important India is becoming in the global economy.
That's true. What about other global institutions? What are their predictions?
The World Bank, for example, is very positive on India.
Wow.
Yeah, they're saying India will keep being the fastest growing major economy in the world.
Wow, that's impressive. Why are they so optimistic?
They're pointing to things like steady investment growth and improvement in GDP per capita. Those are strong indicators that India's economy is on solid ground.
So despite the challenges, India seems to be in a good position.
It does seem that way. But we can't forget the global economy is unpredictable. Things can change fast. Staying informed and adaptable is key.
Absolutely. Speaking of staying informed, let's talk about some of those policy changes happening in India.
Right.
The government's been busy with reforms across different sectors. What are some of the highlights?
There have been some pretty big reforms in foreign trade policy, agricultural subsidies, and financial regulations. The Directorate General of Foreign Trade, DGFT, they've changed their policies to make foreign trade simpler and faster.
Got it. And what about the agricultural subsidies?
The government has introduced PM Kisan digital IDs.
Digital IDs.
Yeah, it's a way to make sure those agricultural subsidies are actually reaching the farmers who need them. No more middlemen or inefficiencies.
Sounds like a good move for the agriculture sector.
Yeah.
And what about financial regulations? Any big changes there?
A bunch, actually. They removed the GST on penal charges that financial institutions levy.
Okay.
So if you're already struggling financially, you won't be hit with extra taxes when you're late on a payment. The RBI also made their monetary penalty framework stricter. Banks that break the rules, they're going to face bigger consequences now.
I see.
And SEBI, the capital markets regulator, they've adjusted settlement norms for inactive brokerage accounts. Plus, they've got new rules for financial advisors.
Wow, that's a lot of changes. Any that our listeners should pay particular attention to.
Yeah, I think SEBI's new rules for independent financial advisors and research analysts are pretty important.
How so?
Well, they're introducing deposit requirements for those advisors and analysts. They're limiting what kind of advice they can give and pushing for more transparency in how they operate.
So they're making things safer and more transparent for investors.
Exactly. They want to protect investors and make sure the financial advice they're getting is ethical and actually in their best interests.
That's good to hear. Now let's shift gears a bit. This newsletter has a section called Relationship Management in Financial Investments.
Oh, yeah.
It seems like you're comparing managing relationships to managing investments. Interesting concept, right?
Yeah, it's pretty clever, actually. It's Valentine's Day, so they're using that to explain financial stuff in a relatable way.
And they're making 5 key points: exiting wrong investments, patience, diversification, return expectations, and continuous learning.
Right. And they use analogies to connect these ideas to both relationships and investing. Like, they compare getting out of a bad relationship to ditching an investment that's showing red flags.
Interesting. They also talk about patience, both in relationships and in investing.
Yeah, just like building a strong relationship takes time and effort, building a good investment portfolio needs patience.
They can't rush it.
Exactly. The market will have its ups and downs. You can't freak out every time things dip.
Stay focused on the long game.
Exactly.
They also highlight the importance of diversification.
That's a big one. Don't put all your eggs in one basket.
Exactly.
Just like you wouldn't rely on one person for all your emotional needs, you shouldn't put all your money in one investment. Spread it out, manage your risk.
And what about return expectations?
Well, they're saying that just like having unrealistic expectations in a relationship can lead to disappointment, setting your hopes too high for investment returns can be bad.
Yeah, you got to be realistic.
Exactly. Understand that market returns aren't always predictable. You need patience and discipline to weather the storms.
Makes sense. And finally, they talk about continuous learning.
That's crucial in both relationships and investing. We're always learning and adapting in our relationships.
Right.
It's the same with investing. You got to stay informed about what's happening in the market, understand those economic indicators, and keep refining your strategies.
So it's relationship advice mixed with financial wisdom. It's a unique approach.
It is.
Okay, let's move on to the good news section of the newsletter. Sounds like they've got a lot of positive things to share.
All right, let's hear it.
First up, strong direct tax collection. Looks like it's going to exceed budget estimates by a lot.
That's great news.
It suggests the economy is healthy and the tax base is strong.
Definitely a good sign for the government's finances. More resources for them to spend and invest, which can benefit everyone.
Next, we have declining poverty rates, especially in rural areas.
That's fantastic news.
It means those poverty alleviation efforts are working.
It really shows how much progress India is making, both economically and socially, and it's especially encouraging to see that progress in rural areas where poverty has always been a bigger problem.
There's also positive news for agriculture. They're saying the agricultural credit flow is going to surpass targets.
That's excellent news for farmers.
It should help boost agricultural growth and support rural livelihoods.
Absolutely. More access to credit means farmers can invest in their farms, adopt new technologies, and increase their productivity. It strengthens the whole agricultural sector, which is so important for India.
We also have record-breaking IPO activity on the National Stock Exchange, the NSE.
Wow, that's a good sign.
It shows investors are confident in the Indian economy and its future.
Yeah, it's a sign of a healthy and growing capital market. Companies have access to money for expansion, investors get a chance to grow their wealth. It's a win-win.
And finally, a major investment from Amazon Web Services, AWS.
Really?
They're putting billions into their cloud infrastructure in Maharashtra.
That's huge.
More jobs, more growth.
It shows that India is attractive to global tech giants, and that investment in cloud infrastructure, that's going to boost digitization and have a ripple effect throughout the economy.
So despite some mixed signals, a lot of positive things happening in the Indian economy.
Yeah, definitely.
But the global landscape is always changing, right?
Absolutely. We can't forget about that.
We've talked about Trump, but there are other factors at play too, like geopolitical tensions, potential global slowdowns, and who knows what else might happen. It's a lot to keep track of.
It is.
So as we wrap up this first part of our deep dive, here's a question for you to think about.
Okay.
If India's economy is like a recipe, what are those special ingredients that give it its unique flavor?
That's a good question.
And how can we protect and enhance those ingredients in a world that's constantly changing?
A lot to think about there.
We'll explore these questions and more in the next part of our deep dive. Stay tuned.
Looking forward to it.
That recipe analogy has been stuck in my head. You know, the one from the monthly mantra?
Yeah, I get it.
It really makes you think, what are those ingredients that make India's economy so unique?
Well, it's a lot of things, right? You've got that young and growing workforce, the hunger for digital innovation, and a surge in domestic demand. All these things, they've been driving India's growth for years.
Kind of like a perfect storm, but in a good way, you know?
Exactly.
But that monthly mantra also said, they can steal your recipe, but the sauce won't taste the same.
Oh, yeah.
What do you think that means for India's economy?
I think it's about those things you can't quite measure. The things that make India's economy different. You can try to copy other countries, but it won't necessarily work the same way.
Right, right.
It's about more than just the ingredients. It's about how they all come together, the culture, the values, that all plays a role in how the Indian economy works.
It's like trying to make your grandma's famous dish. You might have the recipe, but it's her special touch that makes it taste so good.
Exactly. There's that something extra. You know, you can't put your finger on it, but it's there. It's the same with economies. It's not just about copying a formula. It's about understanding the context, the unique situation of a country.
That makes sense. But even with all its strengths, India must face some challenges to keep this economic momentum going, right? What are some of those hurdles?
One of the biggest ones is making sure that everyone benefits from the growth. India has done a great job reducing poverty, but there's still a big gap between the rich and the poor.
So it's not just about growing the economy, it's about making sure everyone gets a piece of the pie.
Exactly. It's about creating a system where everyone benefits, not just a few. And then there's globalization. India has to be part of the global economy, but it also needs to protect its own interests.
It's a balancing act, being open to the world but not losing sight of what makes India unique.
Exactly. And let's not forget about the environment. Growth has to be sustainable. India can't grow at the expense of the environment. It needs to find ways to grow without harming the planet so everyone has a healthy future.
That's a really important point. Finding ways to grow without damaging the environment. What role do you see the government playing in shaping India's economy, especially when it comes to protecting those unique strengths we've been talking about?
The government has a big role to play, for sure. They need to create an environment where businesses can succeed.
Okay.
Investing in things like infrastructure is key. So is promoting education and making sure people have the skills they need, and cutting down on those bureaucratic hurdles, that's important too.
So it's about setting the stage, creating a space where businesses can grow and people can innovate.
Exactly. It's about nurturing that entrepreneurial spirit, which is so important for India.
Right.
But beyond that, the government also needs to focus on making society fairer,
Yep.
making sure everyone has access to things like healthcare, education, and social safety nets.
It's about making sure everyone has a chance to participate in the economy and benefit from its growth.
Exactly. And we can't forget about good governance. Transparency is key. When the rules are clear and fair, businesses can thrive, and investors feel confident about putting their money in India.
That's a really important point.
Corruption and red tape, those can really hold a country back. India needs strong institutions and a system that's open and accountable. That's how it can unlock its true economic potential.
We've talked about the challenges and what the government can do. But what about regular people, everyday citizens? What can they do to help India's economy succeed?
I think it all starts with education. People need to understand what's happening in the economy, what the government is doing, and what their own rights and responsibilities are.
An informed citizenry is crucial, both for democracy and for a healthy economy.
Absolutely. Citizens can also make a difference by supporting local businesses,
Okay.
investing in their own education and skills, and just being mindful consumers, making choices that support sustainable and ethical practices.
It's about making everyday decisions with the bigger picture in mind.
Exactly. And let's not forget about the power of individual initiative.
Oh, yeah.
India has a long history of entrepreneurship. That's something that needs to be encouraged and supported.
It's about fostering that culture of innovation, right?
Exactly. Encouraging people to take risks and pursue their ideas.
But how do we translate all these big ideas into something practical for our listener?
Okay.
How can they apply these insights to their own lives and their own financial decisions?
Well, I think the key takeaway is that India's economy has tons of potential, but it's constantly changing. There will always be challenges, but the opportunities for growth are huge.
So, for our listeners who are trying to navigate this complex economic landscape, what's your advice?
First, stay informed. Keep up with economic news, understand how government policies affect you, and pay attention to the trends shaping the Indian economy. It's your money, your future. You got to be in the know.
Don't be in the dark.
Exactly. Second, be a smart investor. Don't put all your eggs in one basket. Diversify your investments, think long-term, and don't be afraid to ask for professional advice if you need it.
Solid advice. It's about taking control of your financial future, being proactive.
Exactly. And when it comes to your career, focus on building in-demand skills, keep learning, and be ready to adapt to the changing job market. The way we work is changing fast, so you need to be flexible and open to new opportunities.
It's all about taking charge of your career path. Don't be afraid to step outside your comfort zone. Try new things.
That's it. And remember, India's story is still being written. You have the power to shape your own future and contribute to the nation's success.
Well said. Now, before we go to the last part of our deep dive, let's touch on those global uncertainties again. We've talked about Trump being back, but there are a lot of things happening around the world that could affect India's economy.
Right. The global economy is all connected.
It is.
What happens in one place can have an impact on the other side of the world.
So how can our listeners stay ahead of the game and deal with all this complexity?
Don't just focus on India. Pay attention to what's happening globally. Try to see the bigger picture and how events around the world could affect India.
It's about understanding how everything is connected.
Exactly. And don't be afraid to ask for expert advice. Financial advisors and economists, they can help you understand what's going on and make smart decisions.
Great advice. It's about being informed, being adaptable, and thinking about the long term.
Yeah.
Now, before we move on to the final part of our deep dive, here's something else to consider. How can India keep its unique economic identity while also taking advantage of global opportunities?
That is a tough question. It's about finding that balance, staying true to yourself while being part of the world.
We'll dive deeper into this question and get more insights from our financial newsletter in the final part of our deep dive. Stay with us. We were talking about India finding that sweet spot, staying true to its roots, but also embracing those global opportunities. It's not easy, is it?
It's a tough one, for sure. It kind of reminds me of a spice bazaar.
A spice bazaar. How so?
Well, think about it. Each spice, it has its own unique flavor, its own aroma, but when you blend them together, you create something totally new, something exciting.
Okay, I see where you're going with this. So how does the Spice Bazaar relate to India's economic approach?
Well, India can use its unique strengths, things like its vibrant culture, its young population, its amazing entrepreneurial spirit, and it can combine those with the best ideas and practices from around the world. It's not about copying, it's about adapting, evolving, but in a way that keeps India's identity strong.
So playing on the global stage, but not losing sight of what makes India, well, India.
Exactly. It's finding that balance. India doesn't have to fit into some global mold. It can make its own path, adapt and innovate, all while keeping its unique character and being competitive globally.
Are there any examples of this, where India has actually achieved this balance?
Definitely. Look at the IT sector. India's become a global leader in IT services, but it did it by using its own strengths. A highly skilled workforce, that culture of innovation, and costs that are hard to beat.
Right, they've made it globally, but they're still Indian.
Exactly. It shows that India can adapt and succeed on the world stage without losing its essence.
This brings us back to our financial newsletter. What kind of advice does it have for navigating this tricky economic landscape, especially for someone who might be feeling a little lost with all this information?
Well, the newsletter really pushes the idea of diversification,
Okay,
and not just with your investments, but with your skills too.
don't put all your eggs in one basket.
Exactly. Spread the risk. When it comes to investing, diversify your portfolio across different assets and sectors. And with your career, build a range of skills so you're more adaptable and resilient to change.
So be ready for anything, have a plan B, be versatile.
That's it. And the newsletter also talks about staying informed and being proactive. Keep up with the news, understand how policies affect you, and pay attention to the global forces impacting the Indian economy.
Don't just sit back and watch. Get involved.
Right. Knowledge is power, especially when it comes to money and the economy.
The newsletter also talks about being patient, particularly with investments.
Oh, yeah. It warns against trying to make a quick buck and encourages a more disciplined approach. Focus on the long term, building wealth steadily.
Slow and steady wins the race.
Exactly. The market will go up and down, but if you have a well-diversified portfolio and you're patient and disciplined, you're more likely to come out ahead in the end.
So as we wrap up this deep dive into India's economic landscape, what are the key takeaways for our listeners? What do you want them to remember?
I think the biggest message is to be optimistic.
Okay.
There are challenges, no doubt, but India's economy is strong, it can bounce back, and it's full of potential.
There's a real sense of excitement, of possibility.
Absolutely. If you stay informed, adapt to change, and think long term, you can succeed in this ever-changing economic environment.
That's a great point. And remember that monthly mantra about the recipe.
Yeah.
It reminds us that India has something special to offer the world, something unique and valuable.
It's a reminder that India's culture, its people, its entrepreneurial spirit, they make it a force to be reckoned with.
So to our listeners, we encourage you to embrace the opportunities ahead, to contribute to India's growth story, and to really savor that unique flavor India brings to the global table.
It's been great exploring all this with you.
And to our listeners,